I've just found some good news and some bad news here in the Bitcoin price action. Which do you want first? I've just found the ideal buy for Bitcoin, but the downside is there could be a little bit more pain to come. I'm going to share with you why I think the Bitcoin price action could pull back a little bit more before we're set for our next big move. I'm going to share the exact levels with you guys. Smash some likes. Don't forget to subscribe. As always, if you want to buy or trade any crypto, you can do so using the links in the description to Bybit or Binance, the two platforms I'm currently using to trade, and you get some amazing bonuses using my affiliate links in the description. Now, as you can see here, we are setting up for something called the ideal buy for investor. This is when you've been trading for a while below your 200-day moving average. That is this white line here. We've been trading below it for a while. Finally, you break above it, you hit some resistance, and you come and retest. So again, look at the heuristic. You break above it, you come back down, you retest. Then you go back high, creating a higher high, right? We've just done that. We created a higher high here. But then what happens? You come back down for another retest of this point here, okay, which is this point we've drawn here. So you can see that we could be coming down to that 25,200 level yet again. And why is this not a surprise? This is a level we've been speaking about for a while. I've been sharing various different indicators and chart patterns, which is telling us this could pull back to that 25,000 level. And if it does, I've personally shared with you guys that that is when I'll be taking big DCA positions back into Bitcoin. Now, the reality is we might never hit that 25,000, but I'm going to share with you in this video why I think the markets still have a little bit more nervousness to come and why this could spell a little bit more pain for Bitcoin. As you guys know, we just had a horrible week on Bitcoin, down 9% and one of the worst weeks we have had for many, many months. This is following the previous week, which was a nice positive 7%. And what is worrying about this? After last night's weekly candle close, we've officially posted a bearish engulfing candle. If you've been following my free TA course, ijaz.uk/TA, you'll be very familiar with this candle, and this will be spelling some alarm bells for you guys. When this candle eclipses the previous candle, it engulfs the previous candle, it normally is an indicator of reversal sign where there could be a bigger pullback on the cards. Now, why is this worrying? Well, previously we thought, okay, this could just be a daily pullback. And so on the daily chart, you look at this and you go, that's perfectly normal, right? We were sitting here at 31. We hadn't touched our EMA for a while. Why not pull back from 31 down to our EMA ribbon at 29? That's perfectly fine. As it continues to fall, you're like, it's still fine, even if it wants to come to 28. Where it's not fine is where we're hovering right now. At the bottom of the EMA ribbon, around this 27,000 territory, if we lose our daily EMA ribbon, this could spell a more pronounced move to the downside. That ties in perfectly with what we're seeing on the weekly, right? Which is we could be getting a bigger pullback into the weekly EMA ribbon, which sits at 25,800. Okay, again, that 25 and a half level seems to have a lot of confluence for a pullback here. So I'd be looking for a retest of this weekly EMA ribbon. And if we could catch it at this point, what a perfect DCA entry that would be for me to load up on a little bit more Bitcoin on this pullback. And that's what I want to get in a habit of doing. I don't want to be buying at 31. I want to wait for the retracements down into these levels at 25. That is a 20% difference on Bitcoin. And if you can consistently do that, avoid the FOMO, buy into the fear, avoid the FOMO, buy into the fear, that's when you're going to start building out a portfolio at a very, very good cost basis. And that's the aim of the game for an investor right here, is wait for these pullbacks and buy there. I mean, look at this move here. People are buying on this candlestick at a high of 25,200. Now, that seems like a good price, right? But no, you're buying at the very tips of an extended move. If you had waited a couple of weeks, you're buying when this candle flushes out at 19,500. And that is the difference, right? If you look at the difference between the top of that candle to 19,500, again, a 22% saving, right? You want to be getting these 22% savings every time, and that's going to build out your portfolio in a very nice manner. Here's what's interesting, and almost a little bit painful as well, which I have to share with you guys. If we head down to the dollar index, we know that the dollar index has been heavily inversely correlated to Bitcoin. But during that down 9% week on Bitcoin, the dollar index didn't move that much up. Nope. In fact, it posted a 0.14% green candle here. In other words, it was flat on the week. In other words, the Bitcoin flush out was a Bitcoin primarily led move. And we spoke about the various liquidations that were going on last week. I mean, we had easily over $500 million worth just here. If you look at these candlesticks, these skyscraper candles here I'm hovering over $500 million worth of longs liquidated. These were overzealous longs, desperate to get in the price action because they thought it's a dead certainty that Bitcoin's going to go to 40,000 and 50 and 60,000, and they FOMO'd in. And that is why we saw the Fit and Greed Index notch up to 68. It was really greedy at one point, and now it's flushed back down to 53. This is good. We need this kind of a flush up. Now, what's worrying, however, and this is the worrying sign, is that this doesn't mean Bitcoin's no longer correlated. It is still correlated risk on assets, right? And what I think is going to happen is I think the next few months could still be painful for risk on assets. And the reason for that is the US debt ceiling. Yep, the US debt ceiling is going to be a big issue for the rest of this year, particularly leading into that June period. And this could create a lot of nervousness for the markets. For those who aren't familiar, the US has met its own set limit for debt, 31.4 trillion. They set this debt themselves and they say you cannot spend more than this. And then what you get is both sides of the aisle politically start to argue and say, oh, we're not lifting the debt ceiling. Now this gets into a little bit of a chicken and mouse game leading up to a deadline which they set in June time, at which the US could default on their debt. Oh no, horrible. This really does scare the markets, and the markets hate it because really it's just a political game. And 74 times since 1962, this debt ceiling has been lifted. But even despite that, it still does create worries, because the reality is, if you go back to, for example, the 2011 situation, Standard & Poor's, it got that messy. Standard & Poor's, one of the biggest rating agencies for debt, took the radical step of downgrading US debt from AAA, which is like the perfect rating, down to AA+. This can have huge ramifications, and markets will be nervy leading up to this. Now, if we're trying to look at, for example, some dates, when could this end? Well, on June the 5th, Treasury Secretary Janet Yellen has pinpointed that June the 5th could be the earliest possible X date. So that's why I'm expecting a lot of volatility heading into that June period. Now, the interesting thing is if they decide to then increase the debt ceiling, then the Treasury will have to start increasing their reserves. Now, if they're increasing their reserves, what does this mean? Well, this is going to have a quantitative tightening-like approach. They're going to hoover up liquidity from the economy. Now, this has a similar effect to raising interest rates. So this could put further pressure on Jerome Powell around Q3 time, June, July, August, maybe September period, for Jerome Powell to say, hang on, we're doing interest rate hikes, and we've got interest rates at a very high level, around that 5% mark, maybe 5.25% mark. Plus, the Treasury are now hoovering up liquidity because they're building up their reserves again to cover off their debt. Maybe we need to then decide to pause and maybe go ahead and cut interest rates if we haven't paused before then. And that is where you start to see the markets have, of course, priced in 90%. If I show you here, they've priced in 90% already that the Fed are going to do 25 basis points in the May meeting, that is in about 10 days' time. But then in June, they're expecting the Fed to pause there. 70% of the market is saying, you know what, after one more in May, you've got to pause. And the question there is going to be, when do we get our first cut? Right? In July, you still expect, markets are mainly expecting still to stay around that level. If you go into September, that's when you get divided opinions where 40% of the market start to say, hang on, we could get our first cut in September time. So we got to look at how this plays out. It depends on what happens. I think there's going to be a lot of chicken and egg going on between now and June, and that could present us with an opportunity to be picking up Bitcoin at lower prices. I'm still looking out for that 25,000 level mark, and that would be a really nice nibble for me personally. But if we start losing this weekly EMA ribbon, we're going to have to revisit potentially even possible lower price targets, which would not be great whatsoever if we start losing our weekly EMA ribbon. Jumping in here to the smaller timeframes, you can see here back on the hourly, Bitcoin did of course fall down here. It managed to hold a little bit of support at 27,100 here on the hourly chart. It tried to move back to reclaim an important level at 27,200, but it was rejected. Went back again, rejected. Okay, so this is showing that at 27,700 level, that dotted yellow line I'm showing you there, is now starting to act as resistance, right? We're struggling to break beyond this level now, which is a little bit of a worry here on the short term. So looking at this on the short term, where could we be heading next? Well, the next major support is going to come in at the bottom of this wedge. So I'm looking at the bottom of this wedge, which sits at around that 26,700 26,700 level. Failing that, we've got some very important support coming in at 26,200. Those are the levels I'm looking out for. 26,700 and then 26,200, which I'm looking out for before then that price target of 25,000, which is this big yellow line I'm drawing out here. That's what I'm looking out for here on the hourly. Amongst all that doom and gloom, there's a little bit of saving grace here. There's a little bit of positive activity going on. Remember I showed you that if you take the Fibonacci ratio swing low to swing high from our fall from 19,500 up towards 31,000, you then see that we did fall down here just to the top of our golden pocket, which is our 0.618 to 0.65 mark. Again, we go through this in TA course, ijaz.uk/TA, learn all this stuff, so I'm not talking gibberish to you guys. And you can see here, if I zoom in, we're managing to just try to hold, right? We're just not letting it fall. So we're getting stuck between two levels. One is that 27,800 level, which I showed you on the other chart, but otherwise, it's this 0.65 golden pocket at 27,200. So failing this level, if we're unable to hold and break beyond, back up towards the 0.786 line, you will be looking to fall down to the next line, which sits at the 0.618 level, 26.6k. Now guys, if you aren't following me on Twitter, make sure you're gone and follow me over there. I do weekly roundups, okay? So if you do want to see a weekly TA roundup, I share it over there. If you want this to be more regular, let me know and I could do this if you enjoy it. Already 25,000 of you have gone ahead and watched this thread and read this thread, so definitely take advantage of this. If you're busy, if you don't get to see all the TA updates, I do a weekly roundup on a Sunday there, giving you all the things you need to look out for. So there you have it, guys, a nervy time in the market, but this could be forming a really good long-term entry point for those people FOMOing in at 31,000. Are you being patient? Are you poised? Are you ready? Are you getting cash ready for a more bigger potential pullback? Thanks for watching, guys. Go watch this really important video here, which is about the top 5 indicators I cannot do without in crypto, and I'll see you over there.